Ladies and gentlemen, good day and welcome to the Zensar Technologies Limited Q1 FY24 conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Devang Bhatt. Thank you, and over to you, sir.
Thank you, Darwin. Good evening, everyone. On behalf of IDBI Capital, I welcome you all to Zensar's Q1 FY24 earnings call. We have with us Mr. Manish Tandon, CEO and Managing Director of Zensar Technologies, Mr. Sachin Zute, Chief Financial Officer, and a few other members of the senior management team. Before I hand over the call to Manish, I would like to highlight that the safe harbor statement of the second slide of the analyst presentation is assumed to be read and understood. Thank you, and over to you, sir.
Thank you, Devang. Hello, good morning, good afternoon, and good evening, everyone. Thank you for taking the time to join us today to discuss Zensar's financial results for the first quarter of FY24. With me on this call are my colleagues, Vijay Simha, who is the Chief Operating Officer, Sachin Zute, who is the CFO, and Vivek Ranjan, who is the CHRO. With that, I will turn to the summary of quarterly results. For the first quarter of FY24, we registered a service revenue of 149.2 million, representing a sequential quarter-on-quarter growth of 2.4% in constant currency. Our overall revenue stood at 149.3 million, representing a sequential QOQ growth of 1.3% in both reported and constant currency terms. In line with our stated strategy, we continue to refocus on pass-through revenues. Let me walk you through the performance of our geographies and verticals for the quarter. All growth numbers are in constant currency and correspond to services revenues only. The US region posted sequential QOQ services revenue growth of 1.3% and a YOY decline of 0.2%. The Europe region registered sequential QOQ services revenue growth of 6% and YOY growth of 3.4% in constant currency. We continue to have good traction in the region from both long-standing and new clients. The South Africa region saw good growth momentum with sequential QOQ services revenue growth of 3.4% and YOY growth of 19.6%. Our sustained focus through our data, experience-led engineering, and cloud-native capabilities has led to a steady growth on the back of new project ramp-ups at some of our key clients in the region. Coming to the verticals, banking, financial services, and insurance reported sequential QOQ services revenue growth of 4% and a YOY growth of 13.2% in constant currency. We are witnessing consistent growth in this vertical over the last few quarters, aided by new deal wins at some of our key clients. High-tech, including emerging, registered sequential QOQ services revenue decline of 2.6% and YOY decline of 4% in constant currency. Manufacturing vertical registered sequential QOQ services revenue decline of 0.5%, and year-over-year growth of 8.2% in constant currency. Consumer services registered sequential QOQ services revenue growth of 11.5% and YOY decline of 7% in constant currency. In the high-tech, manufacturing, and consumer services verticals, we continue to see softness in the overall demand environment as clients continue to defer or optimize their capital spend and scale back their budgets. This has resulted in reprioritization of spends at client side with discretionary projects, witnessing a reduction in scope or getting deferred. For the first quarter FY24, our gross margin stood at 33.6%, representing a sequential QOQ increase of 170 basis points Our EBITDA stood at 18.7%, a sequential QOQ increase of 420 basis points. The order book of Q1 FY24 stood at 154.2 million, supported by healthy renewals and multiple wins across verticals. As per our usual wage hike cycle, effective 1st July, we gave our wage hikes across the organization. I am pleased to share that for the first quarter, our last 12-month attrition declined to 15.9%, a sequential improvement of 390 basis points. In quarter, attrition continues to see downtrend on account of easing supply-side issues and our employee-centric policies. As one of our core principles, we continue to drive client centricity across the organization. Our annual customer engagement score for FY23 has seen a 13.6% improvement to 66.5 in FY23, and this is something that we are most proud of. With that, I will now invite Sachin Zute, our Chief Financial Officer, to provide an update on critical financial data. Sachin?
Thank you, Manish. Good day, everyone, and thank you all for joining this call. In addition to Manish talking about the business, I will take you through some of the key financial metrics for the quarter ending June 23. The revenue for the first quarter of FY24 stood at $149.3 million in US dollar terms, reflecting growth of 1.3% sequentially in reported terms as well as in constant currency terms. Services revenue for the quarter grew by 2.3% sequentially in reported terms and 2.4% in constant currency terms. EBITDA for the quarter stood at 18.7%, increase of 420 basis points from previous quarter. This includes one-time benefit of 100 basis points, primarily on account of research and development credit received during the quarter. Improvement of EBITDA for the quarter was primarily driven by utilization improvement from 81.4% to 82.5%, which is 1.1% increase quarter-on-quarter basis. Ongoing operational efficiencies program has helped the cost of delivery during the quarter. Resizing of sales and support functions also helped us to improve the EBITDA for the quarter. As communicated in last few quarters, we continue to focus on improving efficiencies in sales and support functions. Current improvement in sales and marketing costs will be reinvested in the business through capability building and strengthening sales organization further. LTM attrition levels have shown continuous improvement over quarters and stood at 15.9% for Q1 FY24, lowest amongst recent quarters. DSO for the quarter continues to remain healthy at 74 days. For the quarter ended, cash and cash equivalents, including investments, stood at $233.8 million, $32.3 million increase from last quarter, and $70.2 million increase year-on-year. The effective tax rate for the quarter is 25.7%, an improvement of 50 basis points quarter-on-quarter. The total amount of outstanding hedges as on June 30th, 2023 were equivalent to $246.7 million against $173.7 million in Q4 FY23. On ESG front, we continue to make progress in line with our published ESG vision and mission. As of Q1 FY24, our global green energy component is 17.9% of total energy consumed, and our carbon emission from Scope 1 and Scope 2 saw significant reduction of 49.3% compared to our base year of FY19. We continue our journey on water positivity with water regeneration exceeding water consumption at our Pune campus. A week-long celebration of World Earth Day marked on April 22 with various contests for employees, and World Environment Day on 5th June with plastic cleanup drives across our India locations. and local shoreline cleanup activity at Milpitas in California. With that, I now invite Vijay Simha, our Chief Operating Officer, to provide updates on business operations. Thank you.
Thank you, Manish and Sachin. Greetings, everyone. Manish has provided insights about our business, and Sachin just shared details about the key financial metrics. I will provide inputs about our operational efficacy and performance of our service lines. As part of sharpening our operational excellence, we continue to focus on pyramid optimization, managing utilization in an optimal range, calibrated usage of subcontractors, as well as managing our on-site mix. Disciplined execution on these initiatives enabled us to reduce our overall cost of delivery. Enhanced fulfillment rigor enabled us to minimize the impact of volatile demands that we see due to the macroeconomic situation. This rigor enabled us to increase the build headcount and also improve our utilization, as mentioned by Sachin, by 110 basis points. Service lines, we continue to partner with our clients to help them deliver high-value services to their customers by leveraging the innovative offerings from our service lines. This quarter, we saw good growth in most of our service lines. On a quarter-on-quarter basis, in reported terms, our data engineering and analytics service line registered an impressive growth of about 12.6%. Advanced engineering services grew by 5.5%. Foundation services grew by 6.7%. And experience services grew by 2.5%. Application services and enterprise applications registered a decline of 4%. Our key service lines, advanced engineering services, data engineering and analytics, and experience services, continue to scale up well, making up close to 33.8% of our total revenues. We are witnessing notable movement in our digital engineering capabilities. Our generative AI engineering services offering, termed AI Engineering Buddy, is now listed on the Azure marketplace. In our data engineering and analytics practice, our experience-led approach to cloud data engineering has resonated extremely well with our clients. We continue to focus on improving our offerings further around generative AI or data engineering, improving customer experience through AI, supply chain analytics, and so on and so forth. With that, I now hand it back to Manish.
Thank you, Vijay, and thank you, Sachin. In conclusion, ladies and gentlemen, our disciplined program on improving margins along the identified levers has given us meaningful results over the last 3 quarters. While the near-term demand environment continues to be challenging, resulting in delayed decision-making and slowdown in spends, we are certain that the long-term secular growth in IT industry will not diminish. Further, over the last 2 years, we have increased our addressable market through our service line investments. We are working on gaining mind share with our clients through these service lines, and our conversations continue to remain positive. Our experience to engineering to engagement proposition is echoing well with our clients. Net new and alliance function is shaping up well. Investing for sustainable long-term growth remains our top priority. With that, we can open the lines for any questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi, good morning and congrats on the great numbers. A couple of questions. So first is, Manish, could you give us a sense on how the the outcome on cross-sell initiatives, any interesting things that you've seen so far and how it's looking like? The second is your thoughts on so far the results that have come out in terms of the rest of the industry. I think they've been calling out weakness on a going forward basis and so on and so forth. Do you think that sort of raises the risk of sort of any revenue declines in the near term, or do you think from a portfolio perspective, based on the rigor that we have, that we should still be in positive territory relatively? And if you could give some color on the consumer vertical as well and high tech. And finally, what do you think could be the wage hike impact? How should we think about that, Sachin? And if you could also give a sense on the net new wins during the quarter. So those were the questions. Thank you.
Nitin, thanks. Thanks for the positive commentary on the results. I think your first question was around cross-selling. So cross-selling has been a positive for us. We are seeing a good amount of green shoots there. One of the ways that we measure cross-selling is how deeply we are penetrating certain accounts, and we continue to see very, very positive momentum on that. And our storyline around experience to engineering to engagement is showing results. We are cross-selling a lot of our services into these accounts. Downsides on revenues, I don't think that I can comment more than what my larger peers have commented. The market remains tough. But we continue to execute well, and we are hoping that the execution will lead to consistent results as we move forward. Consumer and high tech, they remain weak spots for us. They are still work in process. I don't think we can, some of the weakness will go away. Every day, different sorts of technology companies are declaring some amount of slowdown or furloughs or letting go of people. So these two verticals remain work in process for us, but we are seeing some newer deals in these two verticals, and if one or two of them can get converted, that will be very positive for us. Wage hike impact, I would leave it to Sachin to answer. Net new wins, we had opened 9 new accounts this quarter, which is slightly more from a run rate perspective than what we have done in the past. Sachin, you would like to comment on wage hike impact?
Sure. Thanks, Manish. So, Nitin, as you know that usually our wage hike cycle is from 1st of July, and we have actually given a hike to across the bands starting from 1st of July. And given the current market condition, I think we have benchmarked the wage hikes, and based on that, wage hikes have been given. Obviously, we don't want to make any forward-looking statement, but I can only say that given the market has softened a bit as compared with last year, the number could be slightly lower than what we did last year.
Sure, perfect. Thank you so much, and all the very best.
Thanks, Nitin.
Thanks, Nitin.
Thank you. We have the next question from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Yeah, thank you for taking the question. Manish, just a bit of color also on the BFSI space. This quarter, BFS continues to be fairly strong. So how are you seeing there has been a fair bit of rumbling around BFS spending across the industry? Is that something where you continue to see strength on a near-term basis, or can that take a pause after the strong run which has happened? And Sachin, on the margin side, how should we look at the cost changes which have happened this quarter? I know you elaborated a bit, but on an absolute basis, there has been a meaningful dip in both employee expenses as well as on sales and marketing side. What has really surprised you on the upside, and how should we look at this going forward?
Thanks. So I'll answer the first question, and Sachin can take the next one. So on the BFSI sector, the commentary, I would agree with the commentary that the competition has provided. The market remains tough. But again, you have to look at it in our context, where we have, in most of our accounts in BFSI space, we have a relatively very small market share. And as BFSI sector is looking to cut costs and so on, they are sometimes looking at suppliers like us, who are smaller, more agile, and can deliver same or better results at a lower price point. And I think we are benefiting from that approach. Sachin?
Yeah, thanks. Thanks, Manish. So Mukul, as you know, for last 3-4 quarters, we've been running a very systematic program on cost optimization, and I think the results of that continues to flow in. And a few of the things which has affected it is obviously the pyramid corrections which we are seeing. The N-1 hiring program which we initiated a couple of quarters back, that has definitely contributed to the overall cost of the company. Apart from that, you would have seen that our utilization has also moved up in the right direction from 81.5 to 82.6. That has also contributed a bit. Also, one of the focus area for us has been the reduction of the cost of agency hiring. That is also something which is one of our primary focus area, and over there as well we have seen some movement, and that has helped the correcting the overall cost structure in last few quarters, and the results of that is being seen in current quarter.
Mukul, does that answer your question?
Sorry, I was on mute. Sachin, just a bit of a follow-up on that. You guys have been guiding for a mid-teens profitability. Does this materially change that?
So, Mukul, if you remember, we've been talking about this cost correction, and what we are doing over here is wherever there is a fat, we are trying to take that fat out, create headroom for investment into growth. So as part of my opening script, Mukul, I said that the current drop which we have seen in S&M, we will try to reinvest back into the business, in further strengthening the sales engine for the company.
Yeah. Sachin has so much fat that even I have lost weight.
Okay. Thank you so much for answering the question.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity, and congrats on a very good execution despite tough macro, especially on the margins and services growth. So Manish, the first question is, in a tough macro, to see more than 2% growth in services, also a positive growth of 1% despite client-specific issue is very heartening. So do you believe the cross-selling, upselling efforts will help you to keep maintaining the growth momentum even in a near term despite the tough macro as a whole?
See, again, as far as macro is concerned, I will reiterate that as far as we are such a small player with such small market shares in our clients, that macro should have limited impact on us if we are executing well. Simultaneously, as I have mentioned before, with our new service offerings, we have significantly expanded the addressable market. So we are relying on these two things to try and continue our sales and growth momentum. Last 2 quarters we have been successful. Let's hope this success continues as we go forward.
Thanks. And my follow-up is the green shoots about the order intake growth will help you to get the lead indicators about the growth momentum further increasing or not. So how are you looking at order pipeline, order intake, whether the investments, efforts have resulted into this, or you still believe there are 1 or 2 more quarters in terms of investment and effort before we start seeing uptick in the order intake? And what is the percentage new business within the order intake?
So, Sandeep, thanks for that question. We track our order book based on 3 broad categories: EE, which is renewals; EN, which is existing clients, new business; and NN, which is net new clients. I can say that on EN, which is existing clients, new business, we have had the highest order booking in the last 2-3 quarters, which is continues, which means that we are executing well on the cross-selling program that we have and trying to penetrate deeper into accounts. I hope that answers your question.
Okay. And just last thing on the margins, just wanted to understand now the normalized margin at EBITDA level could be 17.8 if I strip out the one-time gain of 100 basis. So is it fair to assume whatever further improvement we may actually have, we may invest back in the business and we can continue in this range of 17-18% EBITDA margin going forward? And is there any further scope for any further fat to be reduced, or you believe we have optimized on that?
So, Sandeep, that's a great question, and that is a question I asked myself also as I look back. See, as a new CEO, I have not had a chance to go through a complete cycle of 4 quarters, right? So we have not seen Q3 impact of furloughs, how it will impact us, the slight slowdown that happens during holiday periods, and especially in Q4, we have not seen that. So if you ask me what is the equilibrium margin of the business, I would continue to say that I would like to make sure that it doesn't go below mid-teens, which has been the promise of the company till now. And we will invest some of the margins into revenue growth and in building up our employee skill base. But as I said, we will continue to make sure that the margins do not go below mid-teens as promised by the company before.
Okay.
And anything positive, I'll be as happy as you are.
Yeah, thanks. And just last thing, Sachin, what is this nature of one-time R&D credit, and will it continue every year in the first quarter, or?
So, this R&D credit is subject to certain government grants, which we get in overseas jurisdiction, and it's completely dependent on, their cycle of payout. Like just to give example, the similar R&D credit we got in Q3 of FY23, but fortunately for us, it came in Q1 itself for the current fiscal. So it completely depends on their cycle, and there may not be any predictability in that right now.
But it can come once in a year.
Generally, that has been the cycle which we have seen historically.
Okay. Thanks, gentlemen. All the best.
Thank you, Sandeep.
Thank you. We have the next question from the line of Devang Bhatt from IDBI Capital. Please go ahead.
Hi, sir. Congratulations on a good set of numbers. So last time in the analyst meet, you said that there are a lot of cross-sell opportunities. So in terms of time mining, where do you see the opportunities and which service line specifically are seeing more traction in our clients? Secondly, on overall basis, which services line do you see that will be a key driver of growth in the long term?
I would say, to answer your first question, see, we have gone to the market with this theme of that we are the best company out there who can do right from research to experience to engineering to actually engagement, both on products and on projects. And we are seeing a lot of traction on our experience services business because of cross sales. In fact, our revenues from acquired entities has actually grown at a faster pace in this quarter than the rest of the business. So we are seeing traction there. We are seeing traction in enterprise SaaS space, which is SFDC, Oracle, this thing. We are seeing traction in advanced engineering services, and we believe that advanced engineering services will continue to be a growth area for us, especially with the advent of ChatGPT and LLMs and AI. So I would say the newer service offerings will see faster growth than as they should as far as overall growth is concerned.
Great, sir. And secondly, on you said that you will focus more on the not the commoditized annuity, but the other part of the annuity business. So where are we on that, and how are we progressing on that part?
I think what we are trying to do, see, annuity. First of all, please don't get me wrong. I love annuity business. We all do in the industry. And what I meant when I said that was, the traditional annuity business is, large infrastructure deal or large application development and maintenance deal, etc. These we may not be as competitive as some of our tier one players, but in the newer areas like experience services, where we sign up with clients for, say, our total number of 10 pods of 100 people for the next 2 years kind of deals. Those are the deals that we are very interested in, and we are making good progress on those deals.
Sir, any number on what annuity right now we have, or?
So generally, we have not made that number, though we internally track it, but that's not a number which we generally disclose.
Okay, thank you, sir. Thank you for taking my question.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Hi, thank you for the opportunity and congratulations for the strong performance. Manish, I wanted to get your sense with regards to our margin optimization, given what we've seen with regards to our headcount metrics as well as the improvement in terms of our offshore delivery. How should we be thinking about these two aspects if I'm thinking about over the next 12 to 18 month time frame?
Sanjay, do you want to take that?
So Manik, as you know, obviously we've been working on multiple levers in last 6 to 9 months on improving our EBITDA margins, and as you know that over last 3 quarters they have definitely given us desired results. Now it's very difficult for me to give you guidance for next 2 quarters because as you know that we don't provide guidance. But as Manish rightly said, the objective will be to maintain the EBITDA margins in a narrow range around mid-teens. And if we have anything about that, objective will be to invest back into the business in capability building and sales were as required basis.
Vijay, do you want to add anything to this?
Manish, I think largely Sachin has covered. The only thing from an operational perspective that I would like to add is that we are focused on those 3-4 important levers: pyramid optimization as well as utilization management. We think at this point of time that we will operate in a narrow range when it comes to utilization, especially considering the fact that we have a fair bit of whatever macroeconomic stuff that could create volatile demand situation. So that's pretty much the only thing that I want to add apart from what Sachin has already commented.
Sure. And have you disclosed the value of deal wins in the current quarter?
So we did. It's $154.2 million is the order book which we have reported. Sure. It's part of the analyst presentation.
Sure. Thank you, and all the best for the future.
Thank you very much.
Thank you. We have the next question from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi. Thank you for the follow-up. Sachin, the employee cost on the BSc release, it's actually down 4% sequentially. Headcount is sort of flattish. So what sort of explains that difference? Is it so that was one. And second, wanted your thoughts on where this R&D benefit is sort of recorded on the P&L. So those are the two things.
So Nitin, employee cost primarily is due to a couple of reasons. One is definitely the pyramid corrections, which I spoke about. The every attrition which we've been having for last few quarters, we've been filling it with N-1 level, and that is something which is helping the overall employee cost for us. Also, if you look at our focus on melting the fat which was there on site, and I think that is something is also giving us some benefits as part of the overall employee cost optimization. And attrition on a quarter-on-quarter basis has been dipping, and I think the impact is also flowing through in the 4% number which you are seeing.
Okay. And on the R&D expense, I mean R&D revenue, so...
It's part of the gross margin for the company.
It's part of the gross margin. So within the SG&A, there is nothing unusual. That's more like a sustained rate, or how should one think about that? That's a sharp drop.
Broadly, you can say that. Yes, Nitin. SG&A benefits, you can say there is no significant one-time aspect in right now there.
Okay, so it's only in the gross. Perfect.
Yes. Yeah.
Perfect. Thank you. Thanks, Vita.
Thank you. The next question is from the line of Pratap Maliwal from Mount Intra Finance Private Limited. Please go ahead.
Hi, am I audible, please?
Yes, you are audible,
yes.
sir.
Hello?
You may proceed with your question, sir. You are audible.
Yeah, thank you. Thanks for taking my question, and congrats on a great margin performance this quarter. So I just wanted to ask, last quarter, I think we had said we had some right shifting of revenues, particularly in the Europe geography, which seems to be reflecting in our numbers this quarter as well. So could you just help me with quantifying the revenue? How much was that?
So, obviously, that revenue which we spoke about last quarter has been realized in this quarter, but it's not going to be possible for us to exactly specify how much that that is in current numbers.
Okay, sir, no problem. Fine. Thank you for taking my question, and congrats for a good set of numbers. Thank you.
Thank you very much.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hi, good evening, team, and congratulations on a great set of results. So most of my questions have been answered. So I just would want to know in the upcoming year, what kind of flavor do you see in terms of what, a macro environment or, when can we expect, a bit better conducive environment for us to keep on start growing? Maybe it can happen next year or this year. Could you, what sense do you get from, your interaction with clients and everyone?
I wish we had a crystal ball, is all I can say. I think, there is a lot of talk in the US of a hard landing, soft landing, semi-soft landing, interest rates, and still the economy is very resilient, at least in our largest market. In some of our smaller markets, we are seeing more impact of inflation and so on. But frankly, I don't think that things will materially change in the next 6 months at least. And that is perhaps the best I can say.
No, fair enough, sir. Yeah, I think everyone's in the same boat. Just wanted a flavor if possible. So yeah, it's a correct thing. It's a very difficult thing to guess. Yeah, I think that answers my question, and all the best, team. Thank you.
Thank you.
Thank you. The next question is from the line of Sandeep Shah from Equirus Securities. Please go ahead.
Yeah, just a follow-up to what Nitin has asked. If you look at the run rate of sales and marketing expenses, it used to be between 90 to 100 crores. It has fallen to 77 crores in June of 23. And Sachin, your answer to the earlier question, it believes that this run rate can continue, right? So 6.3% as a percentage to revenue in terms of sales and marketing cost can continue, despite we are looking for investments going forward.
So, as I said, the objective of the current correction which you are seeing in the sales and marketing cost, we are in process of investing back into the business through the appropriate hirings which we need to do to look at the growth for the future whenever the cycle turns around. So those investments has already started, Sandeep. So from that perspective, we want to invest in capability building inside the organization and ensure that we are ready for the growth when things start moving in the right direction.
I mean, just to answer your question, we are not cutting back on sales by any stretch of imagination. We are, even as we speak, every week we have 2 or 3 new salespeople joining us. They are coming in with a lot of new ideas and a lot of energy, and we are excited to have them on board. We will not cut muscle. We will cut fat.
Okay. And just Manish, you sounded slightly bearish on consumer, but consumer this quarter has done well. So is there any one-off projects which may not repeat going forward? And is there any large client-specific issues in any of the verticals which you foresee, or this is more to do with macro versus anything else across industries as a whole?
Well, I think, look, at least for consumer, I had told you guys last time that I think the worst is behind us, right? And the team that we have is a very resilient team. They will not let go of easily. And they are opening new accounts, they are farming existing accounts, and they are doing a wonderful job despite the environment.
Okay. And there are no large client-specific issues in any of the verticals?
No large clients with any big issues in any other verticals. We don't comment on individual clients, but you can get a sense of where issues are or not there based on our top 5, top 15, 20, whatever you guys measure us on.
Okay. And last thing, as a summary, is it fair to say, apart from high-tech and manufacturing, we have started witnessing some green shoots of better demand tailwinds in the rest of the verticals?
I don't think, at this point of time, we are seeing any broad green shoots. So the macroeconomic environment, which is there for others, continues to be for us as well. So I think, given the current situation, we are trying to see what best we can do in current environment.
Yeah, it's all about executing well. With our size, if we execute well, we will continue to do well.
So, thank you.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may please press star and one. The next question is from the line of Manik Taneja from Axis Capital. Please go ahead.
Hi, thank you for the follow-up opportunity. Sajid, if you could detail out what you meant by replacing the existing workforce with N-1 workforce, because when I'm looking at the employee metrics that you disclose in your annual report, it appears that the proportion of lower wage employees has only gone down for us in FY23 versus FY22. So it would really be helpful if you could detail out what you meant by that.
So Manik, as you know, that one of the programs which we have been running is every attrition which happens in the company. We are trying to see wherever possible, how can I fill that with the junior employee, which helps me to correct the cost structure on an overall basis. Historically, we did see that the pyramid was kind of a diamond. And over last three quarters, we are trying to get it in the shape. So if you look at from the Q1 of last year to now, it has definitely improved in shape. So the comparison which you might be seeing must be from the FY22 to FY23, Manik.
Sure. Just to confirm, between FY22 to FY23, when I see the numbers in the annual report, the sub 30-year age segment essentially is reduced to about less than 41% of the total workforce versus 46% as of end of FY22.
Okay. We can get that checked, Manik, and I can touch base upon it with you offline.
S&M basis, if the understanding that you guys are giving is that we will step up the S&M investments as we continue to invest in the business from the current run rate that we see in the current quarter.
Yes, Manik, that's a correct understanding.
Sure. Thank you and all the best for the future.
Thanks, Manik.
Thank you. The next question is from the line of Anand Agrawal from Balaji Investments. Please go ahead.
Thank you so much for the opportunity and congratulations for the wonderful set of numbers. I hope, in last 3-4 years, and not in 3-4 years, this has been the best ever performance in terms of the PAT numbers, though the top line has not grown substantially. So my question is that since company is sitting with a lot of cash, so what is the plan to deploy this cash going ahead so that the revenue and the further business can be enhanced?
So thank you for the question. As you know, as we have earlier stated as well, we continue to look for opportunities to scout for targets which adds to the capability of Zensar, and we want to continue on that journey. At any point of time, we keep on evaluating 3 to 4 targets. Once we find the right one, we want to use this cash in buying the right company. At the same time, our dividend policy as part of capital allocation continues to be what we have done historically.
Sir, one more question, last question. Just a broader picture. I just want to understand what kind of, growth in terms of percentage you are seeing going ahead, maybe a year or two kind of that. Just a broader question.
As Manish also said that, if we would have had a crystal ball, it would have been wonderful. But unfortunately, given the current scenario, when the visibility on the business is relatively low, it's very difficult for me to actually make any comment from that perspective. But I can only say that the IT spend globally has only shown positive direction over last decade and a half. And we all believe with the changing technology landscape, the prospects for the growth in this industry continues to be relatively strong.
Thank you so much.
Thank you. The next question is from the line of Sarang Sanil from RW Investment Advisors. Please go ahead.
Good evening, sir. Thank you for the opportunity and congrats on great set of numbers. So my first question is the 10 million reported as purchase of traded goods net of this R&D credit? And if not, how has this number gone down substantially? Right. My second question is on the employee side, can we expect this to stabilize around this range and ramp up as good demand comes in, or can we expect this to go down further on a net basis? And my final question, is it possible to give some color on how you are able to bring down the attrition level to this range? And Manish, sir, something you feel Zensar is doing differently compared to other companies? Those are my three questions. Thank you.
So, can you just repeat your first question, please, because we could not get that clearly.
Sure, sir. So, the 10 million INR number reported on the financials as purchase of traded goods, is this net of R&D credit that you received?
So, there is no linkage between R&D credit and $10 million traded goods which you are referring to. The R&D credit benefit which we got is currently factored into the gross margin, and the 10 million rupees traded good is part of the revenue line item which we have reported. Now, for the attrition question, I am going to request my colleague Vivek to comment on, please. Thank you.
Thanks a lot, Sachin. Thanks, Sarang, for the question. Yes, you are right that what we have in terms of our retention, it is best in class. And as Manish mentioned, we have very employee-centric policies combined with the initiatives which we have taken that helps us a lot. And from the perspective of our culture, we very strongly focus on creating a happiness ecosystem where employees learn and thrive. That has helped us a lot. And also we have taken a set of initiatives to ensure that there is a high level of investment in learning and there is a culture of recognition and managerial capability built, all of which has ensured that we are best in class in terms of retention, and we stay focused in this pursuit.
Okay. So also on the employee count, what do you expect?
On the employee count, the hiring will happen depending on how the demand shapes up. We are very closely watching out the current demand environment. And given that the attritions across the industry has slowed down, our ability to fulfill in a very short time has definitely improved. So depending on demand environment, we will be taking that call.
Sure. Thank you, sir, and all the best.
Thank you.
Thank you. Ladies and gentlemen, we will take that as our last question for today. I would now like to hand the conference over to Mr. Manish Tandon for closing comments. Over to you, sir.
Well, I would like to thank you all for being on this call. There were a lot of results today in this sector, so I'm pleased to see that you decided to attend this call. I'm sure as you go through the results, you'll have more questions, and we have an excellent investor relations team who can help in answering all those questions. So thank you once again, and thank you for congratulating us on our good results.
Thank you. On behalf of Zensar Technologies and IDBI Capital, that concludes this conference. Thank you for joining us. You may now disconnect your lines.